Hello, everybody. Welcome. Today, again, we have Lakshay Gandhi, Director of Finance from SafeMax. So we will be discussing how to read a statement of adjustments. Most of you would know what it is, but if you don't, this is a perfect seminar for you. Again, we would like to welcome all our audience on Facebook, LinkedIn, and YouTube. Lakshay, take it away.
All right. Thank you guys for joining in. We're just going to be starting in a few minutes. Before we get started, just a little bit about myself. My name is Lakshay. I am the Director of Finance with SafeMax Group of Companies. And today's topic, I wanted to share a little bit more related towards the real estate industry and how it can help you as a realtor or a first time home buyer make your life a little bit easier when it comes to closing. A lot of us have already purchased our homes or are in the process of purchasing a home, or we have a client that we're going to be helping soon to purchase a home. Whenever we close, or on successful closing of any transaction, we get statement of adjustments as well as a trust ledger. So today's topic, I wanted to identify a few ways how you can basically read the statement of adjustment, which is the closing document, and make it a successful closing for you, and help you out really understand what are the numbers, where are the numbers coming from. And if you have any questions, you can reach out to your lawyer as well, because they are the ones who are eventually prepare the statement of closing, statement of adjustment, as well as the trust ledgers. So today's topic, we're going to be focusing on that. For those of you who are brand new, once again, my name is Lakshay. I am a director of finance with one of the biggest and fastest growing real estate groups. And, I do these presentations to build a connection with new clients to understand how they can, or how I can help them, basically do more and more closings and work successfully in the real estate market. I have my own accounting practice where I help serve over 800 realtors and agents file their taxes and do tax planning. So if you have any questions in regards to that, I'll be more than happy to set up your prep, do bookkeeping, as well as file your taxes at the end of the year. So without further ado, let's get started. All right, so how to read statement of adjustments. So today's agenda would be basically, we will be talking about statement of adjustment followed by an example. Then we're going to talk about the trust ledger, how we're the buyer side as well as the seller side. Then we're going to talk about the typical adjustments to look out for in different types of real estate transactions, whether it be adjustments related to a new build, whether it be related to pre-construction or a resale house. We're going to talk about those as well. So what is a statement of adjustment? For those of you who don't know, it is similar to a bank statement. It is a record of your real estate as well as mortgage transaction if you're in a refinance deal, and it is used by both buyers and sellers to determine how much they owe at the time of closing. Essentially, the statement of purchase will statement of adjustment will actually highlight your purchase price, followed by any additional costs related to land transfer tax, title insurance, and any utilities adjustments that might be subject to the transaction. And finally, it will also highlight any deposits as a buyer that you'll be making towards the transaction. So statement of adjustments versus the trust ledger. So if you're buying a home, there are two statements that are prepared. So first one is the statement of adjustment. And once the statement of adjustments is prepared, then the total at the bottom of the statement of adjustment is carried towards the trust ledger statement. So remember, trust ledger statement and statement of adjustments are two separate documents, and I will tell you how they're correlated in the following slides. And once the full amount you owe to the seller is determined, it is technically moved to the statement of adjustment. From the statement of adjustment, it's moved to the trust ledger statement. It could be buyer trust ledger or the seller's trust ledger. And it basically helps in making sense of all the costs and expenses associated with buying or selling a home, whether it be real estate commission, whether it be transaction costs related to property taxes, utilities, or legal fees that you are paying towards your lawyer. Those are all highlighted in the statement of adjustments. So now let's move to the next slide where we talk about an example of how a statement of adjustment looks. So let me get a highlighter. So as you can see, there are two columns. One is the cost paid by the buyer, and the second column is associated with cost paid by the seller. That is technically how all of the statements are split. There's the left side and the right side. Whenever you have a purchase price, this is technically the purchase price paid by the seller when they initially purchased the house, and now they're selling it. So what do they get? They get a deposit from the buyer, so that is subtracted from the purchase price, and then we adjust any of the 2020 taxes, property taxes that might have been paid. So for example, seller was in the house for 201 days out of the 365 days, but because the seller had paid the entire year's worth of property taxes, they need to be backed out from it, and there is a little bit of a credit owed to the seller, which is $1,700 and 1716.97. So based on this, the balance due on closing is, so 475 minus 20,000 plus the $1,716, that is additional property taxes that is supposed to be paid by the buyer. We arrive at $456,000 approximately that needs to be paid to the seller at the time of closing. As you can see in accounting, you need to balance the debits and credits. So it kind of shows you that the debits and credits are balancing and how each of these numbers are being calculated. So statement of adjustment basically describes what are the costs and paid by the buyer versus the cost paid by the seller, and how much will be passed on or moved through the trust account at the end of the statement. So if you see this number of $456,000, this is technically what will be given to the trust account or moved to the trust ledger of the buyer in order to do the successful closing. Now let's move to the next slide, which is what is a trust ledger. In a trust ledger, we basically describe all of the remaining expenses related to basically buying a house. We noticed in the statement of adjustment, it highlighted the deposit, the utilities, and property taxes. But what about the commission paid to the realtor? What about the title insurance? What about the legal fees paid to the lawyer? All of these fees also need to be highlighted somewhere to arrive at the exact number. So that is where trust ledger comes handy. There are two types of trust ledger. There's one from the buyer side, and the second one is actually from the seller side. Both of them can be used in order to, basically understand how much would be the final cost of closing. And the trust ledger is basically describing how the funds will be moved on the day of the closing by the lawyer. So moving to the next slide, we have the buyer side versus the seller side trust ledger statement. In the case of a buyer, you're gonna, just like I mentioned, the land transfer tax, the title insurance, legal fees, as well as home inspection fees will be found on the buyer's trust ledger. On the seller side, because the listing side is who is responsible for paying the commission and their own legal fees, so that is where the remainder of the fees will be highlighted. So two documents in the trust ledger, the buyer side and the seller side. The buyer side takes care of the costs associated with the buying side, and the seller side takes care of the costs associated with selling the house, which is real estate commission primarily. So let's look at an example because that will really identify. So let's go to the next slide and let's look at the buyer side of the trust ledger. Just like I mentioned, whenever it's closing time, you need to have two documents. One is the statement of adjustments, and the second one is the trust ledger. The statement of adjustment in this scenario was a house that is being sold at $475,000. You paid a deposit of $20,000 because you were in the house. The seller was in the house for 201 days only, and they sold it, but they had prepaid the property taxes for the entire year. it needs to be adjusted. So they are backing out 201 days worth of seller share, and the remainder will be paid, taken care of by the buyer. So $1,700 approximately added to the buying side. And at the end of the day, you are responsible for paying $456,000 as the buyer to the seller. Now let's look at the buyer side's trust ledger statement. In the trust ledger statement, it basically highlights all the costs associated outside of the basically related to land transfer tax, title insurances, and legal fees. So those are the costs outside of the real estate transaction that the buyer needs to take care of. So in this scenario, as you can see, you have received a mortgage of $356,000 from the bank. You have a down payment that you must have paid for 108, and basically the third option, which is $456,000, this actually comes from the statement of adjustment. So you have a balance due on closing of 456. This statement of adjustment tells you how much is supposed to be given to the seller at the time of closing. So that $456,000 populates here. And then you have the land transfer tax, title insurance, legal fees. Adding up all of them, you're on the hook for $464,000 on the trust ledger. So two separate documents, but they are interrelated because the bottom number of statement of adjustment gets carried forwarded to the trust ledger statement. Now let's move on to the next slide where we talk about the seller side. The seller side statement of adjustment would be something similar, but has its own costs associated. So let's look at the seller side statement of adjustment first. It talks about the sale price, which is $340,000. You have a deposit that was received from the buyer of $15,000. Once again, property taxes adjustments was there because seller understayed and had paid for the entire year's worth of property taxes. That's why seller will be entitled to get a little bit more money back from the buyer. There's prepaid maintenance fee in this equation as well. Just like property taxes were adjusted, maintenance fees is also being adjusted by the number of days. So usually the monthly fees in this case was $764, but seller was only there for 27 days out of 31. That's why 3 to 4 days worth of adjustment of $76 would also need to be captured in the statement of adjustments. And based on this, $340 plus $7 plus 76 works out to approximately $383. Same thing, the debits and credit needs to match. That's why the balance in the trust over here as well is $325,000 and 83. So basically, you are on the hook to pay $325,000 to the buyer on the day of closing. How does this work? You receive it from the buyer, just like it shows here. You receive $325,000. You paid the mortgage. You basically paid off the remainder of the mortgage that you had with this on this property, and the remainder comes to you. And it is basically the lawyer's job to basically adjust all of these adjustments. The biggest piece of the puzzle over here is the real estate agent commission that needs to be paid, as well as the legal disbursement that needs to be paid whenever a trust ledger is being prepared. So in this scenario, once again, you got the money of $325,000 carried forwarded from statement of adjustments to the trust ledger. And from the trust ledger, you pay off your real estate agent, you pay off the legal fees, as well as any of the closing costs associated with it, which basically brings you down to $176,000 worth of money that you can receive from the seller, from the lawyer at the end of the closing. So hope this contrasting example was enough to kind of showcase how the different types of fees are being calculated and different types of money is being moved by the lawyer on the day of closing. Now let's move on to the next slide. In the next slide, what I'm trying to show here is in the previous slide, I had statement of adjustment and the trust ledger side by side. So if you wanted to just look at the trust ledger, and if you had this is how it would technically look like: a legal fee of 4,800, home inspection of $1,200, and a land transfer of $12,000 gets added to the cost when you are doing closing. So if you're a buyer, although your purchase price might only be $400,000, or in this case it was approximately $450,000, but you do have additional closing costs, which is legal fees, in home inspection fees, and land transfer tax fee. Just a word of advice: if you are in Toronto, the land transfer tax doubles. So if you are a first time home buyer and you are looking for a rebate in Ontario, except for Toronto, you get charged land transfer fees and you get a $4,000 rebate. But if you are buying in Toronto, you will be paying twice as much in terms of the costs associated with closing, because the land transfer tax over there is double. The good part about buying in Toronto is, although the land transfer tax is double, but the rebate is also double. You get a municipal rebate of approximately 4,000 of additional dollars on closing. So if you had a closing cost of $4,000, but now you have to pay 8,000 because you are paying double in Toronto, which is $8,000, your rebate will also double. Usually the rebate is approximately 4,000 and the municipal rebate is 4,400. So you do end up paying a little bit of additional money upfront, but the rebate is also double the amount. If you want to look at the dollar for dollar impact, I can share a link later on after the slideshow where you can actually see how the Toronto's land transfer tax fees is calculated. So something to think about, something to inform your client if they are looking to purchase a first time home buyer. Keep in mind to have the additional land transfer tax fee available whenever you're doing successful closing. So coming back to this example, buyer trust ledger would basically have $50,000 down payment, mortgage fee of $418,000. So total funds need to close this transaction is $468,000. And the $468,000, if you want to look at the breakdown, the cost paid to the seller is actually only $450,000. The remainder of the cost is associated with additional costs, which is legal fees, home inspection fees, and land transfer tax, which does not technically go to the seller. It actually goes to the government and the lawyer to successfully close this transaction. Now let's look at the next slide where we talk about the seller's trust ledger. We talked about the buyer's trust ledger, and we talked about what are the costs, which is majority of the cost is land transfer tax and legal fees. Looking at the seller's trust ledger, you have a commission payable, which is the major big ticket item. Once again, you receive $450,000 on the closing day, but from the $450,000, you need to pay legal fees to the lawyer for closing. You also need to pay commission to your real estate agent, which will be subtracted from this. And at the end of the day, your total earnings in this scenario is actually $423,000. Although the house was sold for $450,000, the lawyer will basically do the deduction and send you back the remainder of the money. Now that we understand the difference between the seller's trust ledger and the buyer's trust ledger, I'm going to end off the slideshow today by giving away what are typical adjustments in different types of properties. In different types of properties, if you have a condominium that you're buying or selling, it's a resale property, you're going to see deposit, property taxes, condo fees, and homeowner fees on your statement of adjustments. If you were to buy a new build, you will see deposit and property taxes, but you will see an additional item under the name of Terrian warranty, the HST, as well as the HST rebate. We all know if you buy a pre-construction, you have to pay HST included in the price based on your family situation. If it's a first-time home buyer versus if you are buying it for principal residence or an investment, you get an HST rebate. So keep in mind, on your trust ledger and your statement of adjustment, you can identify these three items very specifically for a pre-construction condo that you may have booked. If you're buying something in the rural area, where there is not there's a separate connection for a propane tank and a heat tank, you will see adjustments on those rentals as well on your statement of adjustment. If you're a rental property that you are trying to buy, or something that is already rented that you're trying to work out a deal on, beside the deposit and property taxes, you will also need to take care of prepaid rent, and the current month rent would also need to be adjusted by the lawyer. So something to think about. But at the end of the day, I think it is the responsibility of your lawyer to calculate all of these. Usually the accountants are not the ones who would be the best point of contact for this, for questions on your statement of adjustment. But I wanted to educate the listeners and my team here in order to find out, so they're the best realtors in the market, so they understand how statement of adjustment and trust ledgers technically coincide, connect, as well as what are the various fees. So moving on to the last slide. Thank you guys for listening. My phone number as well as my direct email address is on your screen, and I'll open the board for any questions you may have now. Once again, thanks for listening.
Thank you, Lakshay. That was great. It was very beneficial. So yeah, we'll just wait for any questions that are coming up.
Makes sense.
Akshay, how are you?
Good. How are you, Chirag?
Good. I just wanted to say thanks for the session. It was important, and I had some doubts, so which got clarified in the session. So thanks a lot for you.
Thank you, Chirag. Thank you for joining in. I know you're in, it's the first time you're joining in. I really appreciate your feedback. We do these sessions almost every Tuesday at 2 p.m. We were supposed to do one yesterday. We didn't because all of the realtors were mostly busy with the discovery project. So we moved it to today to accommodate and make sure that we have the most number of people attending. Thank you once again for joining.
Thank you.
Any other questions, guys?
Yeah, so Lakshay, basically, when there are no other questions, you have explained it quite well. But again, if anybody does have any questions, reach out to Lakshay. Again, you have his contact number on the screen here, as well as his email, support@accountingops.ca. So reach out to him, and he will be glad to help you out with your clarifications.
Yeah. All right. Thank you very much. I believe since nobody has any questions, we can wrap up this session. Once again, thank you for joining. I will see you guys next Tuesday at 2 p.m. once again with a brand new topic. If you have any topics you want me to cover, once again, I'll be more than happy to address those as well. So feel free to reach out with a new topic or a particular question you may have about the real estate industry, and I'll do my best to address it. So once again, thank you guys for joining in. For any of your bookkeeping, accounting, taxation needs as well, you can reach out to my number and my email address, and I'll be more than happy to set up a one-on-one with you. Thank you very, very much once again. Have a good day, guys.
Thanks, Lakshay. Take care. Bye-bye.